All right, today we're putting on our detective hats and going deep on a stock that just had an absolutely mind-blowing day. We're going to sift through the raw data, piece together the clues, and really figure out what the numbers are telling us about this explosive move. Just look at this number for a second. That's not a stock's return for a year. It's not even for a month. That's what the stock ESHA did in a single day, a jump of over 43%. A move that big, well, it immediately makes you ask one thing. So, how on earth does this happen? Is a surge like this just random market noise, or are there actual clues hidden inside the data? Well, in this explainer, we're going to follow that trail of evidence to piece together exactly what went down. Okay, our investigation officially begins. The case file is for a stock called ESHA. The event? A massive, out-of-nowhere price spike. Let's start examining the evidence. To crack this case, we're going to focus on 3 key clues. First, we'll look at the trend. Which way was this thing already headed? Then we'll check the momentum to see how much force was behind the move. And finally, we'll look at the volume for confirmation. All right, first step, clue number 1. We're following the trend. Before the stock just exploded, where was it going? Was it just kind of drifting along, or was it already building up some serious steam? Whoa! Okay, look at this. The stock's current price is over $20. It didn't just edge past its averages, it absolutely launched past them. We're talking a 50-day average under $12 and a 200-day under 11. This is not a gentle climb, my friends. This is a rocket ship. And in the world of trading, there's a name for this. It's called a breakout. This is that moment a stock just shatters through its old price ceiling, what traders call a resistance level, and punches into totally new territory. ESHA's move is a textbook super aggressive breakout, but that just tells us what happened. To understand how, well, for that, we need our next clue. Time for clue number 2, measuring momentum. This is all about the power behind the price change. Is this breakout happening on a whisper, or is it being driven by a hurricane of buying pressure? The car analogy is honestly perfect here. The price is your speed, but momentum, that's your RPM gauge. It tells you how hard the engine is revving. And one of the best gauges for this is the Relative Strength Index, or RSI. To get it, you really just need to know 2 key terms. So the RSI scale goes from 0 to 100. A reading down below 30 is usually called oversold, meaning selling might have been a bit too aggressive. But a reading above 70? That's overbought. It's a sign of really intense buying, a warning that the engine might just be redlining. So where is ESHA's gauge sitting right now? Get this, ESHA's RSI is at 85.85. That is not just in the overbought zone, it is deep into it. This tells us the buying pressure is unbelievably intense. The engine isn't just revving here, it is screaming. So we have a strong breakout and we have extreme momentum. But there's one final, absolutely critical piece of evidence we've got to check: the volume. Volume tells us how many people are actually participating in this move. Is this a small party with just a few people, or did the entire market decide to show up? And the verdict is in. On an average day, about 167,000 shares of ESHA get traded. But on the day of the breakout, over 7 million shares changed hands. This wasn't a small, quiet move. This was a full-blown stampede. To put a hard number on it, that's more than a 42 times increase in participation. This confirms the breakout is supported by massive, widespread interest. This is such a critical piece of the puzzle. It shows real conviction. Okay, so we've gathered all our evidence. We've got the trend, the momentum, and the volume. Now it's time to put it all together and solve the case of what in the world happened to ESHA. So here's the story the data tells us. The stock shattered its previous price ceiling in a powerful breakout. That move was driven by extreme buying momentum, pushing it way into overbought territory. And crucially, it was all confirmed by a colossal surge in trading volume, showing massive conviction from the market. Now, many data systems take dozens of indicators like these and compile them into a single technical score. ESHA's score right now is a 75 out of 100, and that is considered a very strong score, reflecting the powerful alignment of all these signals. But that score doesn't tell the whole story. And here is the crucial paradox. The same data that shows this incredible strength also flashes a major warning sign. The breakout and volume are powerful for sure, but that extreme RSI reading suggests this pace might not be sustainable.
It's a perfect picture of high-octane opportunity mixed with high-octane risk.
And that leaves us with a final thought to chew on. When the technicals are screaming both go and be careful at the very same time, what does that really tell us about market psychology? It's a snapshot of a market caught in this epic tug of war between fearless conviction and the basic laws of financial gravity. Thanks for joining this investigation.